Hi friends, welcome to Career Connects. I'm going to cover in this video about 25 questions along with best possible answers. These are the questions asked at various interviews of uh, different private limited companies and MNCs. For example, they are Reddy Labs, Genpact of Hyderabad, and Shell Company and HP companies of Chennai and HSBC at Gurgaon. So these questions asked at different levels in these companies, I gathered and given it to you along with best possible answers. Hope you will find this video useful for your interview purpose. What is the importance of profitability ratios? Profitability ratios analyze the capability of a company to generate profits against equity, assets, and sales. This is the important measure to determine the financial health of a company. The next question. What are the key profitability ratios? Key profitability ratios are return on equity, return on sales, and return on investment. Return on equity and return on investment are most important one in deciding profitability of a company. What should be the ideal current ratio and what is that? Answer. An ideal current ratio is 2 is to 1. That is, current assets should be double that of current liabilities. This will measure the efficiency of day to day operations of a company. 2 is to 1. What is the difference between liquidity ratios and leverage ratios? This is very important question. Answer. Liquidity ratios measure the short-term solvency position of a company. This is how efficient the company is able to honor the short-term obligations. Short-term obligations. Mainly liquidity ratios solvency position of a company in short term. On the other hand, leverage ratios measures the long-term solvency position of a company. That means how efficient the company is to repay the long-term loans. Long-term solvency position, that is leverage ratios. Okay, got it? Liquidity ratio and leverage ratio. Short-term solvency position and long-term solvency position. That is the difference. Which portion of the capital is called nominal share capital? Answer. The total number of shares at par value that an organization may issue time to time. This is also referred to as authorized share capital. Nominal share capital is also referred to as authorized share capital. What is the deficit? This is referred to as double balance of a profit and loss account. What do you understand about preliminary expenses? This is one important question you may face. This is the expenditure in the course of formation of a company. Expenses in the course of formation of a company. This includes all legal, accounting, and other expenses which are required to form a company. They are preliminary expenses. Why should we need a trial balance? Can we prepare financial statements without trial balance? Answer. The trial balance provides summary of all balances from the ledgers. It confirms the accuracy of the books and avoid mathematical errors. It is cumbersome to prepare financial statements without a proper without having a proper trial balance. In general, every company prepares financial statements based on trial balance because it gives accuracy. How many types of inventory are there under the head inventory? Mostly the following is the list of inventory in any organization maintains: raw material, work in progress, spares, finished products, and packing material. This question you may face in manufacturing industry. Whenever you apply for manufacturing, definitely you will face this question. What is the fundamental principle in valuing the inventory? This is very important question. The valuation of inventory should be done either cost based or net realizable value, whichever is less. Whichever is less, cost based or net realizable value, and whichever is less. This is very important. Does the cost of inventory affect the profit of a company? This question asked in 2 3 interviews in Hyderabad and Chennai. Does the cost of inventory affect the profit of a company? Yes, it affects the profit. How an inventory valuation would affect profits? This is next version of the previous question. Answer: inventory valuation directly affect the profit of any organization. If opening stock is undervalued, net profit of that period will be overstated. Same way, if closing stock is undervalued, then net profit for the period will also be understated, and vice versa. That means if closing stock is overvalued, then obviously net profit also will be overstated. That is how the inventory valuation directly affects the profit of a company. Under the inflationary conditions, which method of valuation shows the highest value of inventory? Under the inflationary conditions, which method of valuation shows the highest value of inventory? It is FIFO, first in, first out. What do you know about the capital expenditure? This is the large investment by company to run its operations for years. The benefit of capital expenditure spreads over many years. For example, machinery purchase, building construction, etc. This is large investment. Run its operations for years, not within the year. It it is the benefit spreads over the years, and large investment, that is capital expenditure. What do you know about revenue expenditure? This is small amount compared to capital expenditure. This is to incur to continue company regular day-to-day operations. The benefit of revenue expenditure is only for one period for which it is incurred. That is called revenue expenditure. So these are the questions asked at various interviews in different companies, as I told initially. Next question: what do you understand about deferred revenue expenditure? It is middle size or medium size of expenditure, not as high as capital expenditure or not as low as revenue expenditure. The benefit of deferred revenue expenditure spreads 2 to 3 years and charged to profit and loss account over that period. What do you understand about cost center and profit center? Cost center is one small unit for which the costs are accumulated or absorbed. A cost center cannot generate a profit. As the name implies, it is only a cost center. It accumulates only costs. On the other hand, profit center is a small division of a company. This can be a separate business unit or entity for which both costs and revenues both costs and revenues will be accumulated and can measure the profitability. This is the major difference between cost center and profit center. Profit center, where both costs and revenues will be accumulated and can measure the profitability of a profit center. The in charge of a profit center is responsible for its profitability. Example, a stores division or any segment of a business company. Next, how do you differentiate cost control and cost reduction? Cost control is the step by step approach or techniques to apply in order to reach targeted cost. Cost reduction is the achievement of reduction in costs. Cost control is a proactive approach. Cost reduction is a kind of corrective measure. Cost reduction is achieved through cost control techniques such as Lean or Six Sigma, etc. These are cost control techniques through which we can achieve cost reduction. Next, tell me various costs that are noticed in an organization. Different costs that are charged in any organizations are material costs, labor, overheads, production costs, research and development costs, administration costs, selling and distribution costs. Next, what do you understand marginal costing? Marginal costing is based on the system of classification of costs into fixed and variable costs. And here, only variable costs are taken into consideration in the marginal costing for determine the cost of products and the inventory of work in progress or completed products. So variable costs will be considered, only variable costs will be considered in marginal costing. What do you know about opportunity cost? Opportunity cost is the value of an alternative option or resource foregone by adopting a particular strategy or employing a resource in specific condition. It is the return expected from an investment other than the present one. These refers to costs which result from the use or application of material, labor, or other facilities in a particular condition which has been foregone due to not using some other alternative material, labor, or facilities. So, if you want a more detailed explanation on this topic or any topic, please do mention in the comment section below so that I will make more relevant videos as per your interested topic. Tell me few examples of differences between cash book and passbook while preparing bank reconciliation statement. The reasons for differences in bank reconciliation statement could be any of the below. Checks issued to customers but not represented for the payment. Checks deposited but not cleared in bank yet. Direct deposits by customers into the bank and bank charges by bank, and finally interest that is credited by bank. These are the reasons or causes for differences we notice in preparing the bank reconciliation statement. How do you make an entry for the following? The company issued 5,000 equity shares of 10 each at a premium of 20%. This question is asked in written exam of a Genpact interview. Answer: 5,000 into 10 rupees 50,000 and 5,000 into 2 rupees 20% of 10, that is 10,000. So entry will be bank account debtor what is received 60,000 rupees total, to share capital account 50,000, to share premium account 10,000. The narration should be being issue of 5,000 equity shares for 10 rupees each at a premium of 2 rupees. Are international accounting standards still relevant and applicable for companies? Answer: no. International accounting standards are no longer relevant because now International Financial Reporting Standards IFRS are taken over the IAS. How do you calculate a construction contract as per Accounting Standard 7? This is very important question asked in many interviews. As per Accounting Standard 7, any construction contract should be calculated on percentage of completion method. Percentage of completion method. So you may ask, what is the accounting standard for construction contract? Or you may ask directly this question: how do you calculate a construction contract as per Accounting Standard 7? This is the answer. Thank you, friends. Please like and subscribe. Also, write down your thoughts or comments, or if you want more detailed explanation on any topic, please do mention that in the comment section below. Thank you.